Welcome everyone. Today we're going for over trading topic on deliberate traders part 2. First of all, over trading was a problem I had myself when I started. It took me a long time to come over this problem. I looked in many resources. I tried to dig deep behind over trading. I tried to identify over trading. It took me a long time to understand the nature of overtrading and how to come over the problem. And today I'll take you through it. But first, overtrading is one of the main problems that faces new traders and experienced traders, not just me. Everybody faces the problem, especially if you love trading. I love trading and I love attending the market hours, executing buy and sell just for the sake of love of trading. But of course, love doesn't pay bills, only process. So first, before we get to the topic, we have to know exactly what is overtrading. Overtrading is forcing trades out of your risk. Means if you have a risk on the day and you put an extra size just because you see unusual setup or emotional behavior or a A+ setup that you don't see often, and then you go doubling your size in hope to double your profit, focusing on the money, of course. So trading over your risk is an overtrading. Taking too many trades, generating commissions over your profit on the day. So you end up the day with 10 to 20 trades triggered. You end up green on the day, but eventually your commissions eat your profit, you eat your daily profit, maybe with more downside. That's an overtrading if your execution is not paying for that commission. Fighting markets, trying to make back what you lost, in case when you lose part of your risk or when you lose your risk, you start triggering trades just to make the money back. Of course, ego here plays the role, but going for any trade to fight the market to make back what you lost is considered overtrading. Jumping in and out of any single trade setup as a result of uncertainty. You just jump to a setup, it just doesn't go your way, doesn't hit your stop loss, but you get out early because you're not sure, and then starts going your direction again, and then you jump in again. So the same setup, but you have like 2 to 4 entries and 2 to 4 exits on every candle that moves in front of you. Uncertainty here is a reason for overtrading. So you have to identify that. Also, trading out of focus or exhaust or boredom. Any trading coming out of your focus or exhaust or boredom will consider overtrading. You have to ask yourself: are you triggering this trade because you're bored? Are you exhausted and you want to finish early, or you just want to trade? When you exhaust or out of focus, you don't see really what is really happening. You're just following your inner demon. So overtrading, of course, maybe there is a couple of more missing hints here regarding the overtrading, but these are the main problems I used to face, and I categorize them under overtrading. So what happens here? What is like how did this all start? It's not just you love trading and you want to click buy and sell. You come to the trading to the open hours. You have a plan and you started to execute on live markets. You make money, you lose money, you have a risk, you just play what you see in the market. Both could lead to overtrading according to your state. Making money or losing money could lead to overtrading. So it's both ways. It's not just because you lost money or you made money. Both ways can trigger overtrading. You saw your first setup and you don't want to miss the opportunity, so you start taking oversized, making profit. Making profit might satisfy your short term, but it builds the bad habit. So just because you're seeing an A+ setup or something you really wait for, opportunity that only shows once a month or so on, and then you start going oversized to double your profit on this kind of guaranteed setup. It might satisfy your short term, but on the long term it make a bad habit, especially if it makes money. If you make If it makes money, if you make money out of over risk and oversizing, this is a bad habit. If you end up making money, you will consider the behavior for future trades. On the other hand, losing money as a result of this maxing out or oversizing will max out your defined risk, and now you're in a hole that will trigger your aggressiveness towards market to make back your loss. What do I mean? You took the trade, you oversized, or you see the setup that you like, it didn't go your way, you lost your risk on the day, or maybe you lost more because you went with bigger size. Now that process triggers your aggressiveness towards markets because you want to make back. You don't accept paying your risk on such a good trade. So you want the market to pay back for your mistakes. So you start being aggressive and you start even loading some more size on the following trade. You see how it leads. So profit or loss here can be a lead to overtrading. Or you execute as you planned and market volume dries, and then starting to force trades based on trading signals from online sources, taking trades out of your plan to fill your trading hours with execution. Boredom here is one of the main reasons for overtrading. It's a reason where you get bored and you don't find your setups or you don't find anything happening in the market, so you start looking at other channels. You start looking at other strategies, other people, other signals, something to keep you working in the market. And of course, if you're trading any strategy or anything out of your process, basically it doesn't have a mathematical edge. You don't know the systematical approach. You don't know when it performs well. You don't know when it performs bad. You're just taking a random trade. And taking a random trade will lead to overtrading because it just, as I said, it builds a habit. Don't say I try. Trying and trying and trying the same mistake again, it actually builds a bad habit, whether makes money or lose money. Attending markets without defined risk is a big mistake, and no edge can be helpful against bad risk management. No matter if you're a good trader, if you have a strategy with an edge 90% when accuracy, if you make money every day, it doesn't matter. If you don't have defined risk on your day, you don't have an edge. You do not have an edge. So risk management here is a lead. And if you don't have a risk management or an edge in your risk, that will lead to overtrading because of what we spoke earlier. Losing and going over your risk on the day or paying your risk unnecessarily will always trigger this emotional behavior to be aggressive and wanting to make the money back because you feel like you lost your money in the wrong trade or the wrong place. You should not have done this. So you come back to the market and you try to make the market pay back for your losses. First idea comes to trader's mind is how to make it back in case of losing over the risk plan. Then finding another opportunity where you go all in without identified risk. Thinking that is the way back to finish the day green, leading in a bigger loss and deeper hole. So you started with a hole. I'm speaking right now in a loss case out of overtrading. So losses, how it leads to overtrading is through these holes. You start with a small hole and then you go aggressive and just build a bigger hole, and then you only realize the disaster when the market closes and you watch your trades on your report, and then you figure out that you messed up. At this point, you depleted your emotional and financial capital, frustrated and even more aggressive. So, it's not just financially you're depleting your financial. It's your emotional capital that is also depleted because you're tired, you're exhausted, you're angry, you're aggressive, and that don't expect to follow your process or your plan when you're in that state of emotion. Your process needs a lot of discipline and a lot of focus, and if you cannot maintain that focus on the day, you have no way to execute your process. So depleting your emotional capital here is what you have. It's way more. I now risk manage my emotional way more focused than financial capital. Now I have my risk muscle strong. I can control my risk on the day in a dollar amount, but my emotional capital will remain always the challenge because we're humans, and we cannot just eliminate emotions. We just know how to realize when these triggers happen, and we just take action towards it. You just learn how to identify when you're emotional and avoid the bad action. You cannot eliminate emotions. We're humans. You start seeing analysis illusion, where every candle will seem like an opportunity. So when you're in an aggressive state of emotion, you actually start seeing analysis illusion. You literally see every candle in every chart seems like an opportunity to jump in and make this quick buck to cover your risk back. And of course, seeing analysis illusion, if you cannot identify like if this is the right setup or a bad setup for you, you won't be in a good state of mind to also risk manage on it. So if you get a bad result out of it, it just puts you in a deeper hole. And if you get a good result out of it, you make it back on the day. It just builds the habit that tells you, if you went through the hole again, I can do the same action and it will bring me back in a day. So you will keep repeating the same thing, taking trades over size or over risk, and then dig a hole and then go in a deeper hole. And then because what happened earlier, you made it back on the day because of you oversight the following trade. One day you won't be able to make it back. You will just deplete your account. Depleting your account confidence and strategy reliability. The outcome of this process also affects your strategy and reliability, and the process that you want to follow, the mathematical edge that you have in markets. Why? Because don't expect when you're in any state of what have we mentioned, speaking of being aggressive or taking oversize, of building a habit of coming back on the day, fighting the market. Your process and mathematical edge and execution is already hard enough. It takes a lot of effort. So don't expect to get that done while being in that state of emotion. So this whole process also lead to lack of strategy reliability, and slowly you will start fading out of your strategy and just back to square one, where you're just chasing market, fear of missing out, looking at signals and so on. So it really destroys your confidence in your trading strategy. And identifying that problem earlier, how this process works, will help you a lot to understand what you really need to do and your task from day to day on the emotional check. Building the bad habit as you practice the mentioned above. Overtrading might result in commissions that exceeds your profit on the day. Commissions and fees should be counted as a part of your risk on the trade. So, overtrading and generating like 10, 20, 30 trades on a day. You finish the day green, but then the commissions eats out your profit. It's a story that I'm sure everybody goes through at some point, where you just overtrade and your commission eats your profit. So to come over that, you have to really count these commissions as a part of your risk. You have to count your commission on a trade as a part of your trade risk to avoid that. And you have to have the systematic approach to your trades with your risk sizing counted in your fees, your risk, and any other fees that you pay for other platform, anything that should be considered as a part of your risk, to be able to identify is your trading system pays off for your fees and generates profit. You have to be aware of that. The solutions was always there, but not everyone is up to take actions. Even if I discuss solutions here, don't expect that you will go and execute them. It's really hard, and it takes time, and it takes a lot of self-control or discipline to get these solutions done, because most of it you're already aware of, but when the market are running, you're like drunk. You're not really aware of anything happening. You just once you get hooked on a trade emotionally, your plan is gone. So first thing is the sizing. If you have a risk on a day, you have a risk on a trade, you identified your risk, then you can identify the right size for each trade. I always go with less size than the one I can take. Why? I just give myself a chance. If I make an emotional mistake or just a trade that slides out of your stop loss or anything, I just keep sizing less than what I should take on my trade, below the required size on this trade. Why? Just to keep my emotions in control. Have a written checklist of your planned setups and trading conditions. Have it written on your desk every day. Look at it. Before every day, before every trade, before clicking the mouse, make a habit of looking at the checklist and see if if the trade provides you with the conditions that you planned earlier or not. Keep a reminder. This will help a lot. Have an emotional and mental check from time to time. Just ask yourself. Like, this is the easiest way I can say it. Just ask yourself. Always put it on your checklist. Ask yourself, am I feeling okay? Am I getting emotional? Am I chasing trades? Am I really following my plan? Am I putting my effort in planning? Do I execute what I already planned? So keep these things on your checklist and go from time to time to check it out. Keep your emotional and mental check from time to time to keep this under control to avoid over trading. Because once you jump in the process of oversizing or risk and aggressive trading and making a hole, it's like a rat race. It never finishes. You just jump in the loop and you just dig a deeper hole. So we have to eliminate the reason, the cause of the problem first by checking the emotional from time to time. Move your attention from running markets. Plan following day. Sort your day report. Search for new potentials. So in case you're sitting bored and you see that you were trying to execute out of your plan just out of boredom or exhaustion, just move your attention from the running markets. Start doing the actual work that needed for every trader. Start plan for the following day. Plan your stocks and plan your setups, position trades for the following day. Sort your trading report. Just see what you've done on the day, see what you've done in the week. Start reporting, journaling, put effort in that. This will pay off. Search for new potentials. Try to identify strategy. Try to identify weaknesses on your report, risk management, and all of these aspects. Just move your attention from the running market to what you really need to do. This is the actual work. This should be 70% or more of your work in trading markets. Another thing here, contact your trading broker to limit your day risk on your account. If you really have a serious problem and you don't find any of these solutions helpful, contact your broker and they should help you with that. Contact your broker and ask them to set a risk limit on every and each day. So if you reach that risk limit, you're closed for the day, you're done. So you force yourself, take an action pre-market to contact your broker and take an action to limit your risk on the day. So when they force you, you just have to accept it. This is kind of accountability, and there is no shame in doing that. It's just the right way to come over such problem, over risk and over trading problem. And when you finish a couple of days finishing your risk on paying commission or over trading or bad risk, you will learn that the consequences of this behavior is not to be able to trade on the day, and then you'll start fixing your emotional behavior. Have a side activity, a workout or a hobby to shift your attention and refresh your state. Once you're bored, you're exhausted, you start falling in one of these emotional traps in the market, have a side activity always ready for you. Don't sit in front of the market, don't know what to do but trading, because I don't have any side activities. I just attend the markets and force trades. If you have any trouble sitting in front of the market, or you get bored too quickly, just keep that workout or a hobby on the side waiting for you whenever needed. It will refresh, it will bring you back, it will get your mental health on the right track. It will keep you focused on trading markets. It doesn't matter if you trade 2 hours or 9 hours. You have to be focused. If you trade 2 hours focused and you cannot focus anymore, you have to leave. So and it builds up. It doesn't start like from day one attending 9-hour focus. You start the first month half an hour to 2 hours with a full focus, and then you will have a stamina to stay longer in the market with the same level of focus, and so on. It just improves. It builds up. So keep that side activity available for you. Journal your trades in details, including your thoughts and positive and negative mental and execution notes. Journaling Journaling is not just writing your entries, exits, and setup shape. You have to note everything about the trade you triggers in trading markets in details, including your thoughts. What were you thinking when you took the trade? How you felt? Uh, Positive or negative feedback from yourself. Do you see this trade really worth it? Are you happy to put your risk on this trade again if it shows up? Um have you executed according to your process? Did this trade trigger any emotional behavior, aggressiveness? Did it require you to add more size? Like mentally, you thought this is a good trade, so I thought about adding more size. Did this trade pay off according to your plan? It didn't pay off, and in case if it didn't pay off, how to limit the risk on this such trade next time? How to improve? How to identify the edge and all of that? So journal your trades and write everything, including your thoughts on the trade itself. In the end, I don't want anyone to confuse overtrading with missing opportunities. There is a very thin line between those two. So, how to identify if you're overtrading or missing an opportunity? You're always between those two. I don't want to miss the opportunity and I don't want to overtrade. So keep your profit aside from your risk. If you have $100 risk on the day, you make 500 on the other hand on the same day, you still have only $100 risk limit on the same day. If you make a 500, 1,000, a 2,000, you have 100 risk on the day. If you lose it at any point, you're done. That way, taking too many profitable trades according to your process and setups will not be considered as over trading. Don't miss opportunities on purpose when you still have a risk limit on the day, thinking it's over trading. So keep your risk limit is a judge here. Do not miss opportunities, think it's over trading, and do not overtrade, think it's not missing opportunities. You have to identify which side you're in according to the risk you put on the day. If you still have a risk, if you're still focused, then do not miss the opportunity. Some days you will have premium hands with 5, 10, 15 setups. That's unrealistic, but you might have many opportunities on a premium hand day, so you don't want to miss them thinking it's over trading. Thank you for attending, and for any questions, please email me at livewiretrading.main@gmail.com, and I'll see you on Deliberate Trader Part 3.